Let's break down all the action today. We've got Ryan Dietrich, Schaefer Investments Research Senior Technical Strategist, who will tell us one investment opportunity that nobody's talking about that you need to know about. And Mark Travis, Intrepid Capital Management CEO, is here with 3 stock picks for your portfolio, along with Larry Shover in the pits of the CME. Dow couldn't quite make it, Larry. We care less about that and the fact that we once again see a gain for the S&P, the NASDAQ, and the Russell on a day where the data were not good. We got the Empire Index much worse than expected, and we got housing numbers, well, at least the sentiment that wasn't good either. So what's propelling this market higher?
I think right now people are starting to localize the news items. I mean, figure this. I mean, we had the Nikkei rallying 3% last night. Nobody outside of Japan really cared. We had a major Bank of China liquidity drain, and outside of Shanghai, nobody cared. And as you mentioned, one bad housing number. We had the Empire survey come out, and nobody cared. I think at the end of the day, people are giving the economy the benefit of the doubt, realizing that the momentum is all about weather relation. We're hearing a lot about it, but it seems to be true that the weather has decimated our economy, and we will recover, and the pent-up demand will come back.
Well, it decimated parts of it. Of course, it's a big economy. It's a strong economy. But, Mark Travis, when you're looking at a market that doesn't give you easy gains, you go back to basics. And those basics are looking for companies that have a little bit of debt and a lot of customers out there dying for their products. Do you find any stocks like that in this market?
David, it's really tough. I mean, if you really take a long-term view and go back 5 years, you know, the S&P's up close to 20% annualized from the bottom about this time in '09. So it's hard to find unloved securities, but we found a few. The first one is Aaron's. It's a franchise furniture store business, rent-to-own, and that customer is struggling. But we think the shares have merit. There's actually been announced an offer for the company. We don't know if they have the equity capital to take it out at the proposed $30.50. But, you know, the company has net cash, and it has 1.7 million customers that use their products. So that's a name we like.
Ryan, let's get to the macro picture, and we'll get to your picks in just a moment, but I'm just wondering how you are near-term bullish and why, and give people your sentiment behind it.
Sure. Well, Liz, when you look at the market here, we had that 6% correction, and there was incredible fear that came out. You know, record VIX calls, all the sentiment polls are extremely bearish. Now we have this bounce, and what's happening, this bounce keeps going. It's not letting the bulls get back in either. You know, the S&P is above the 50-day moving average, found some support. Now it's higher again. You know, a neat stat, the end of February historically is kind of, you know, boring. Maybe we catch our breath, but March and April are the 2 strongest months going back the past 20 years. So seasonality-wise looks good. You know, under the surface today, small caps up over 1%. They started the lead late last week. We know they've lagged all year, so we've had tech leadership. Now small caps are jumping in. To me, it still looks pretty good to be bullish here for the next several months.
Larry, let's talk about earnings. We're about to get Herbalife. What do you think of the earnings season so far?
I think the earnings season has been good. I mean, it's beaten expectations in a large percentage on the top line. But again, I think people need more than that right now. I mean, they can't get their heads around the fact that how can you have corporate earnings expanding in a benign global macro situation, especially with the emerging markets. So it only goes that far. And right now we're looking at the multiple expanding about 15.5 for 2013. We'll start to see a summertime looking at $128, $130 per share. That takes it down to 14.3. So bottom line is macro boredom like we're having right now might bode very well for multiple expansion. But to answer your question, it's been a really good season.
Well, look, Herbalife has a, what, 1.7% dividend, and Mark, you're picking Western Union, for example, which we just had the CEO, Hikmet Ersek, last week. People want to count this name out because of the competition that swirls around it, but you're getting a 3% dividend on this one without a lot of the drama, and an opportunity for this company to really participate in what could be the technological advancements of money transfers.
Well, Liz, you're absolutely right. I mean, I think this is a wonderful business. Believe it or not, it was one of the original members of the Dow Jones Industrial Average. They started... They started the Telegraph back in 1871, and then money transfer took over in 1980, and they don't do telegraphs anymore, obviously. But it's a business very consistent. It's almost, to me, like a bond. Generates $1.2 billion in operating income. Their dividend's actually a little higher than you said. It's about $3.65, I think, at this price. And, you know, when we capitalize that free cash flow, we come up with a higher share price than where it trades today. So I think it's something safe and cheap in a market that's pretty extended from my point of view.
Mark, I want to stay with you for a second because American Eagle Outfitters, that gets to the question about what the consumer is up to. I know it's a great company in terms of debt. The debt load is negligible if it exists at all. It has been beaten down, but what exactly, and you got a 3.6% dividend, so it's paying out money while you're holding the stock, but it depends on a consumer. And aren't there a lot of mixed signals about what the consumer is doing?
David, absolutely right. If you look at the companies that we're referring, that we've looked at a lot, Aaron's, Rent-A-Center's another public company we've looked at. You look at American Eagle, you look at Abercrombie & Fitch and Aeropostale, competitors in that same space. I think they're struggling with getting the styles right and get them out to the market quickly. But you've now got Jay Schottenstein back in as CEO. He ran the company from '92 to 2002. As you mentioned earlier, there's no debt. There's $350 million in cash. There's 1,000 stores. They got some new stores are opening up, and they've been very good to shareholders between dividends, buybacks, and occasionally a special dividend. So, again, not sexy today, but I think you could get a higher price if you're patient.
Well, it might be sexier than Ryan's picks, but that's why we love you guys as a pair. Ryan goes in a completely different direction, going with names like AK Steel. You know what surprised me about AK Steel? You also like Market Vector's gold miners. You are going in the direction where people ran from last year. But AK Steel, it's interesting, 23% of this float is shorted. Why are bears so bearish about this and you're so positive about it?
Well, that's right, Liz. When you talk about steel, what we saw last year had a terrible year, then a really good fourth quarter. We compare kind of their solar, what we saw, last year solar had a great move, so steel could be the next solar in our opinion. When you talk about AK Steel, though, again, there's a lot of shorts on it. We follow option activity at Schaefer. There's a lot of bearish puts coming in. What's that tell us? Well, people are betting against it. They're betting against a recovery, or they think it's overvalued. You can pick a reason. I don't care. The bottom line is the overall price action starting to improve. All that negativity that's still out there in the options market and the shorts, to us, is future buying pressure. And yes, it's up a lot from the lows last year, but it could really still go the rest of this year, we think.
Ryan, there's a lot of questions about housing right now. We had some mixed signals coming out today about it. You, though, think that it's going to continue to roar ahead. You're for Lennar. You've got a home construction ETF, iShares U.S. Home Construction, that's ITB. Why do you think that housing is going to make it when there are some mixed signals on the horizon? Well, that's right. Look at just today's data. Today's data was poor, yet most housing stocks were down less than 1%, so they kind of fought back, so we like to see that. But again, since the November lows, housing has slowly continued to kind of lead higher. And again, it's all about those expectations. You look at Lennar, huge, about 17% of the float sold short there. A lot of bearish puts at ITB, the ETF we mentioned. Again, significant puts that have been traded on it. So again, those are negative bets. And with any good news, today was bad news. They didn't really go down much. Any good news, they can really go higher as the economy expands the second half of the year, we think.
Ryan Dietrich, Mark Travis, our thanks to you. Larry, we will see with you in just a few minutes for the S&P close.
Thanks, guys. Let's head back to Larry Shover. He's in the pits of the CME. How does it look, Larry?
Well, the way it looks right now, after we've rallied 6% in the last 9 trading days, the million-dollar question is, where do we go from here? And it seems to me this looks vaguely familiar to 2013 in that the pain trade is going to continue to be higher, going higher. It's not going to be easy. We're going to have fits and starts, but we're going to be grinding higher as the macro narrative just has not changed. That doesn't mean we can't be or shouldn't be vigilant. I mean, there can and will be changes at the margin that might change positioning, it might change sentiment, but for now, the pain trade seems to be on the upside.
All right, Larry Shover, thank you very much.